Welcome back. In the last video, we did our trial balance, which balanced, yay! And so now we're going to take that trial balance and put it into our financial statements. Okay, so I said I was going to tell you why the account numbers were so important, and I'm going to show you right now. So when I go back to my trial balance, there's a lot of accounts that can be confusing. For example, prepaid expenses is an asset. Expense is an expense. Accrued expenses is a liability. Unearned revenue is a liability, but revenue is revenue. Okay, so it can be a little confusing because we may not know where things go. But if we've done our trial balance correctly, then it makes it a lot easier to make sure that everything gets into the right statement. So we're going to start with our income statement, which we know is revenue minus expenses equals net income. So I'm going to type in revenue, expenses, net income. Okay, so when I want to go get my revenue, I know it's everything that starts with a 400. Right now, we only have the one account, so I know I have revenue of $112,000. So I'm going to put that in there. Then when I go to my expenses, again, I might be tempted to use prepaid expenses or accrued expenses, but when I look where they are in the trial balance and the numbering, I realize those aren't actually expenses. One's an asset, one's a liability. When I go to put my expenses in the income statement, it's only the ones that start with a 5. So account 500 expense is $11,250. So that is what I will put over here. Okay, and then revenue minus expense. So my net income is $100,750. Okay, now we're going to move on to our beginning retained earnings. So we know beginning retained earnings plus net income minus dividends equals ending retained earnings. All right, so our beginning retained earnings is still 0 because at the end of January, we did not do closing journal entries. We normally only do those at the end of the year, not at the end of every period. Okay, so we're still at 0 for beginning retained earnings. Now I'm going to add my net income, which is $100,750, which we know because we just calculated it. And then I'm going to subtract my dividends. So I'm going to go back to my trial balance, and my dividends are $31,000. So minus $31,000. And then when I add that up, I get an ending retained earnings of $69,750. Okay. Now on to my balance sheet. Remember, the balance sheet is assets equal liabilities plus equity. So we're going to start with our assets. So I'm just going to go over here, and what I'm going to do is I'm going to copy and paste all of my asset accounts. So it's everything that starts with 100. So cash through accumulated depreciation, I'm going to do Control C for copy and Control V for paste. All right. Accumulated depreciation, because as a natural credit balance, is one that a lot of people confuse and think maybe it's a liability, but it's not. It's a contra asset account, so it sits with the assets. And I know that because my account number starts with a 1. All right, so then I can just copy the numbers. And again, if you're not comfortable using the functionality of Google Sheets or Excel, just type them in. It's not a big deal. This isn't an Excel class, so somehow I didn't get this one. Oh, because it's in the other one. Okay, so my accumulated depreciation, because it's sitting with the assets, I'm going to enter it as negative 100 because it's an asset account that has a credit balance, and so that would make it negative. Then I'm going to add up my assets, so total assets, and I'm just going to sum those up. If you want, you can just use a calculator and add them up. And my total assets, and we're going to go ahead and put this in bold, is $489,750. Okay, that's the number we're shooting for. Now we're going to add our liabilities. So I'm going to come over and I'm going to highlight everything that starts with a 200. So accounts payable, accrued expenses, and accrued revenue. And I just do it like this. Okay. And I'm going to copy that over. And then I'm going to copy over my balances. All right. These I'm listing as positive. I'm in the liabilities section, so I'm expecting to have a credit balance. If any of these had a debit balance, then I would put them as negative. But because they all have a credit balance, which is what a liability should have, then they are listed as positive, okay? So the only negative I have is this accumulated depreciation because it's a credit balance within the assets. All right, so then let's see, total liabilities. We're going to add those up. And $320,000. All righty. Finally, we have our equity. So our equity is going to be our stock account, which was $100,000. And then remember my dividends, my revenue, and expenses. I've already pulled all those together in something called retained earnings. So then I'm just going to put retained earnings here. And I'm going to copy that number from my statement of retained earnings, which is right here. So my ending retained earnings is $69,750. So my total equity is going to be adding the two of those numbers together. And it's $169,750. All right, here's the moment of truth, folks. Total liabilities plus equity is liabilities of $320,000 plus equity of $169,750 is $489,750. And look at that. My total assets equal my total liabilities plus equity, just like the accounting equation says they're supposed to. So my balance sheet is in balance. All right. So that was a nice little review of how we put together our T accounts, our trial balance, and our financial statements. In the next video, we're going to do our closing journal entries. We're going to assume this is the end of our year. We have a February 29th year end. And then we'll be done. So I will see you in the next video. All right, bye.